Hey guys, welcome to this week's Swyftx Squawk with me, Pav, lead market analyst here at Swyftx. Today we're going to be diving into some of the data that we've seen come out this week and understand what it might mean for the market. At the moment, we are seeing prices continue to slide. As we can see, Bitcoin is down 8% for the last 7 days. But, is the market potentially overreacting? That's what we're looking to unpack today. We have seen fear and greed really get to levels that we haven't seen since 2023. These are multi-year lows when we look at a website here like CoinMarketCap, where just the sentiment, it hasn't seen much worse in recent time. And it comes at a very interesting time when the fundamentals really, they've never looked stronger. Particularly pointing to last week, we saw the White House green light establishing a strategic Bitcoin reserve and even a US digital asset stockpile, so a few assets outside of Bitcoin to be introduced as well. These are fundamental tailwinds we've all been waiting for, really, with those that have been in the industry for quite some time now. When we think about most notable recent macro events of this magnitude, the biggest thing we've seen is probably the exchange traded funds or ETFs go live in the US in 2024. Even with all these good news items, it's still not been enough for the markets to basically move any higher. And it also comes at a very interesting time as well, where we have seen inflation, one of the key headline metrics that's been causing obviously quite a bit of concern for the last few years, continue to fall to the downside. So overnight in the US, we saw a fresh print land under expectations. Policymakers, they want to see inflation trending to the downside. So seeing a step down like this is very positive long term. But then we move to other economies like China, second biggest country by GDP. Also facing inflation issues, but the opposite of inflation, deflation. So where their inflation data actually came in under forecasts and is in the negative. You have economies like China that basically are looking for effective ways to now stimulate versus countries like the US, which are in a bit of a tussle now between balance growth with inflation. Because for them, they really want to avoid any potential growth scares. It's a big deal for them to just get that formula down pat. Again, very interesting state of the landscape right now. And apart from what we've seen this week, we can also look at some key stats in the longer run. Looking at a metric like M2, which broadly measures the amount of cash or credit in the system globally. So this is looking at central bank balance sheets, etc. We have seen growth periods in this particular metric measure up quite nicely against when we have seen Bitcoin prices rise to the upside as well, historically speaking. While past performance isn't indicative of future returns, this is a particular metric that has held quite a high correlation with crypto and Bitcoin in the past. And again, we have seen this metric stepping up to the upside and growing since December 2024 into January and February of this year as well. So again, if this is a trend that we continue to see historically, while it may not be immediate, we have seen this be quite a positive move for Bitcoin prices and performance. But that's it from me here at Swyftx. We'll be back next week to see what's happening in the market. Thanks very much.